All right. Good morning, everybody. Welcome to Maynard Costerisan's year-end payroll webinar. We're so glad that you're here. Today, we're going to be sharing updates on year-end payroll planning, issues, reminders, and changes you need to know. There will be an overview of recent changes to payroll guidelines and rules, provisions related to payroll tax law, remote workers' impact on your payroll, and more. Thank you for joining us today. For a few housekeeping items, this session is being recorded and everyone is muted. If you have any questions, please type them in the Q&A function. We will have time at the end to answer some questions for you. With that out of the way, I would like to welcome Tony Horsch, Courtney Kelterborn, and Renee McNutt to today's session. Tony has worked for Maynard Costerisan for 25 years. She provides accounting and payroll support to clients as well as outsourced accounting services. Courtney started with Maynard as an intern in 2018 and moved to full-time in 2019. She works mainly with outsourced accounting, primarily telecommunications and closely held clients. Renee joined Maynard in 2018 and works mainly with the accounting and outsourced solutions, outsourced nonprofit clients. She builds annual budgets and improves processes and procedures for her clients. Thank you all for taking the time to share your knowledge today. And Tony, I will go ahead and turn it over to you.
Well, welcome everybody. Thank you for joining us today for 2022 year end and planning session. So that gives us a good chance to refresh our memories. If you've been doing payroll for a long time like me, I still always need a refresher course in December to get me going and thinking about things that I need to plan on. We're also going to talk about wages and fringes. Some things about what taxable fringe benefits you might have to add to your W-2s, what things aren't taxable. And then Courtney's going to share with us some tips and information about 1099 forms and vendor payments. And then Renee is going to go through some form due dates and the updates to some of the annual limits that the IRS always updates and the states update. And then she'll talk a little bit about year-end planning. So thanks again. So this definitely is not meant to be an exhaustive, list of things that, but again, just to get you thinking, get you resources to answer questions that you might have. And so I like to tell people to refer to irs.gov. There's a lot of information there. And since we're trying to determine what they say is taxable and not taxable, that'd be the first place to go. Especially their publications 15, 15A, 15B. Those, if you're wondering if something's taxable, that'd be a good place to look. Michigan.gov /treasury or UIA, or whatever state you're in. I know there's probably people doing payroll in multiple states. So be aware of all the information that they provide on their websites, as well as cities. It can be very tricky. There's a lot of information. And then the American Payroll Association, we're members of that. They've got good resources, good webinars, publications that have helped us a lot. There's a lot of trade associations and the state CPA associations that also have information. AI CPA would too. We'll be giving out the handout for today's webinar. That'll be emailed to you as a follow-up to today's session. And just know that the Maynard team is here to help. So we definitely can answer questions, do some research if needed. And so feel free to reach out to us. Our contact information will be included as well. So wages and fringes. One thing I like to mention, because this question comes up quite a lot, people wanting to know, is it okay for me to treat somebody as an independent contractor? And what usually happens is the person that wants to be an independent contractor is trying to, avoid withholding a lot of times because they just think, well, I just, want my full payment. And so I want to be a contractor. Or on the other hand, we've seen, employers who think, well, then I can save on payroll taxes if I treat them as an independent contractor. So what I would say is be very careful is the main thing. Won't go into too much detail here, but basically, the person then ends up paying self-employment tax. If they haven't had any withholding, they end up paying tax at the end of the year, which causes problems. The IRS, their side of things is they want everybody to be an employee because that allows them to collect more payroll taxes up front. So definitely you're going to want to have things in writing. If there's contracts, keep contracts, or just a written agreement about the treatment of those people. Gone through audits where state and federal, the state, is trying to ascertain whether or not person should be an employee for unemployment purposes. And they are looking for, is this person in business for themselves? Do they have a business card? Are they turning in timesheets? If they're turning in a timesheet, that makes it really look like they're an employee. How much control do you have over that person as far as how they work, where they work, and that type of thing? So I refer to IRS Form SS8. It kind of gives a checklist of what the IRS is looking for, but they aren't very clear on how many of those points need to be present for that person to be an employee. So it's a guideline. They would like us to use it, that form that is, as a test. So if you formally wanted a determination from the IRS of whether a person was an independent contractor, you could send that in, but I'm not suggesting that. I'm just saying that's a guideline, unless there's some kind of dispute where you need a determination. Then I wanted to talk quickly about the newish W-4. It's not new now, but people still have a lot of questions about that. And so we'll just talk briefly about that. I know, again, people that have done payroll as long as I have, it's kind of a strange concept that, we don't have withholding allowances. And people kind of get a little tripped up on how they talk about it. Just a reminder too, if you don't have a W-4 on file, it's not signed by the employee, we need to just treat them as single. And I know this is kind of squished and a little bit difficult to see. Again, this will be in the handout. But basically, the thing with this is if they want less withholding, that's kind of when this comes into play, less or more. But there's no allowances, so they have to figure out how much more withholding they want. And then if they do claim dependents here in step 3, what that's really saying is that's how much less withholding there's going to be in total for the year. So that has been very confusing. It's only been around for a couple of years. And if you have old employees that want to update their W-4, you have to use the new W-4. So in some software, if you use different software, it treats it differently depending on whether it's the new or the old. And so hopefully eventually we'll get away from having like the 2 different ways to figure it. All right, so wages and fringes, what's taxable and what's not? Really, we need to assume everything's taxable and then figure out what maybe is the exception to the rule. So again, publication 15 is great because it gives a table of different examples of things that may or may not be taxable. So that's a good list. Some of it's a little vague. So there might, if you had a specific thing that you want to know, we can dig into that, do a little bit more research. And the internet's helpful for that too. There's technically not a de minimis with the IRS. So they say, because everybody wants to know that, what's the minimum I can pay and not have to treat it as taxable? Technically $25, or excuse me, technically nothing is non-taxable. There's no amount too small. $25 is used commonly. And we've seen that a lot, but that they're saying it doesn't include cash or gift cards. So again, it's up to you how to handle it, kind of how you feel like you want to take the risk on. But the official answer is there's no de minimis. So again, publication 15 and 15A are good resources. If you've got questions. Now here's the common ones. So the ones we see the most are if the employer pays group term life insurance and the employee's coverage is over 50,000, then the amount of coverage over 50,000 is taxable. And there's a formula for that, which is in the handout, and I'll go over it a little bit. But that's based on age and the amount of coverage. Personal use of the company car or company paid car or aircraft, if anybody's looking for a company that has private jets, that would also need to get added to their taxable wages. Again, there's a formula and a worksheet, which is all in the handout. And we also can calculate those for you. We do a lot of that. And so that is something you can ask us about. If there's over 2% shareholders in an S corporation, their health premiums that the company pays would get added to the W-2. Disability, long-term care, or health savings contributions. Those all need to get picked up on the W-2 for an over 2% shareholder in the S corporation. Employee achievement awards, gifts and prizes definitely need to get added on. If you have those and want to know more about it, there's a little bit of research, but usually length of service is excludable. And the reasoning there is because the length of service, you're not really earning it. It's just based on number of years. Everything else is like you're earning it or winning it. And so that's kind of the differentiation there. Employer paid moving expenses. This had changed in the last couple of years. The only time employer paid moving expenses is not taxable is if there's an active duty military person that comes to work for you and you're paying their expenses. Third-party sick pay. This one's very tricky. If you have a disability plan where your employees get paid sick pay or disability pay, depending on your agreement with your insurance company, those may need to get added to the W-2 and most likely are taxable. And it just depends on a lot of different things, is how long they collect it, who paid the premiums, whether or not the insurance company is taking on the tax payment liability, which that's common, but not necessarily always true. So that's why you just need to check with your third-party sick pay insurance company. Some common non-taxable fringe benefits would be, well, it's not really a fringe benefit, but a business expense reimbursement would not be taxable, but it has to be on an accountable plan where they're providing receipts, or it's a per diem or something like that. And if you're just taking their word and writing them a check, or if you're doing like an auto allowance where you're saying, well, I'll pay $50 a month for use of your personal car, that would be taxable because they're not accounting for it and you're not making them turn in mileage or something like that, then it would be taxable. Employer paid student loan debt is not, if it's a qualified plan. And again, it's a little complicated. So if you have that, you'd have to look into what makes it a qualified plan. And then qualified transportation and parking, which is a bit vague, but again, if you have that, you just want to do some checking on making sure it's designed in a way that it's non-taxable. So calculating the wages and fringes. the personal use of a company vehicle is going to be based on the total miles driven on that company vehicle and how much of it is personal miles. There's a whole worksheet that you plug in these numbers. And the one thing that a lot of people don't realize is that commuting is personal miles. IRS does not allow a business deduction if you're paying the employee to drive from home to work. Excuse me. Excuse me there. Group term life insurance coverage, again, it's based on the age of the employee in the amount of coverage over $50,000. So publication 15B talks about the calculation of the fringe benefits and the amount to add. You can choose to gross up the benefits, and the reason to do that is if you either choose to have the employer pay both employee and employer side of the taxes, or if you don't have time to add it in to collect the taxes from the employee, you can gross it up. Otherwise, you would just need to add it to one of your last payrolls of the year so that you can collect the tax from the employee on that value. Sometimes you'll get, if they're significant, you'll have some maybe grumpy employees about having that taken out of their last payroll check around the holidays. And you can certainly do it sooner than that if you choose to. I would say too, when you do add those taxes in, be very aware of the IRS deposit schedule. You don't want to forget to pay the payroll taxes on just those fringe benefits. And just, be aware of that. You're gonna have to follow your schedule. And if you date them, say December 30th or 31st, you have to follow the regular tax deposit schedule for your EFTPS. A lot of times you can gross it up by just factoring Social Security and Medicare, even though those things are still taxable for federal and state. You actually have the choice of not grossing it up, including the federal or state income tax. You can just do Social Security and Medicare. If somebody's over the limit for Social Security, it gets tricky, a little bit more complicated, a little bit more like an algebra problem, but that does factor in there. I just wanted to mention too, with local and state taxes, the last few years, there's been a huge increase in remote workers. And so we just want you to be sure that if you do agree to hire somebody that works out of state, you do need to, in most cases, register for payroll taxes in those states and cities. So refer to those specific state and city websites to find out and make sure you're using the correct W-4 forms for the state and city. There are reciprocal state agreements as well, like for the state of Michigan, the surrounding states are considered reciprocal states. And so there might be a little bit different requirement for withholding for those. And again, I included this in the handout, but this gives a few good examples if you've got a question about where the company is located versus where the employee works, or if they work in different states across the border. This gives some good tests and examples to follow. Again, it's complicated, so let us know if you've got questions. With that, I will turn it over to Courtney.
Okay, thanks, Tony. My name is Courtney Kelterborn, and I'm going to be going over the basics of 1099s in this next section. So what are they for, who should get one, and so on. So let's start with who should receive a 1099. In very broad strokes, you're going to generally need to issue a 1099 to anyone who was paid non-employment income of $600 or more during the year. So what does that mean? So common payments made during the year that would require a 1099 would be payments to non-employees for providing services. So for example, like any freelancers or contractors that you worked with during the year. And one way to think about it is that if someone is providing services to your business throughout the year and you don't send them a W-2 at the end of the year, then you're likely going to need to provide them a 1099. In addition to any non-employees that provide services to the business, any non-incorporated companies that provide services would also need a 1099. So maybe if you hire an LLC to mow your lawn or shovel the sidewalks, then they're potentially going to need to get a 1099 from you as well. Also, renter royalties that you pay to non-incorporated companies are going to require a 1099. So if when you write the check at the end of the month for the rent for your business and it's written to a non-incorporated business, then you want to issue them a 1099. And then another common one would be any payments to attorneys or law practices would require one as well. So the filing threshold for issuing a 1099 in most cases is going to be if you made payments to that vendor of $600 or more during the calendar year. There are a couple exceptions where the filing threshold is going to be a little bit lower, but we'll talk about those on the next slide. And then even if you operate on a fiscal year, the amount paid is going to be determined from January 1st to December 31st of every year. And it's also important to remember that it's only payments made during the year that count towards that $600 threshold. So for example, if you paid a vendor $599 during the year, and then on December 31st, they give you another bill, but you don't pay that amount until January 2nd, then it wouldn't count towards meeting the $600 threshold in that current year. So in the examples we looked at, we can see that in most cases, 1099s are going to be issued either to individuals or to non-incorporated businesses, but there are some cases where corporations would receive a 1099. So in the case of any payments for legal services, it doesn't matter if the law firm is incorporated, they would still receive a 1099. And the same is true of health payments for healthcare services or medical billings and collections. You would issue those 1099s even if the vendor is a corporation. So let's look at some common 1099 forms that you might need to issue. Probably the most common ones that we see are the 1099 NEC and the 1099 MISC forms. So the 1099 NEC was introduced in 2020. So that's form is going to be used for any non-employee compensation paid to vendors during the year. So your contractors and freelancers are going to fall into that category. The non-employee income did used to be reported on the 1099 MISC prior to 2020, but now you shouldn't have any non-employee compensation on the 1099 miscellaneous. So common things you would use the 1099 miscellaneous for would be rent payments and royalty payments. And just something to note with the 1099 miscellaneous, if you're reporting royalty payments made during the year, instead of that $600 filing threshold, if you make more than $10 of royalty payments during the year, then you need to file a 1099. So that's one instance where the threshold is much lower than the typical $600. Also, payments to attorneys might be reported on either the 1099 NEC or the 1099 MISC or both. So fees paid for legal services would go on the 1099 NEC form as non-employee compensation. But if you do a payout of gross proceeds from a settlement to your attorney during the year, then that goes on the 1099 MISC instead. Another common form would be the 1099 DIV or dividend form. So that would be used for any dividends or distributions paid to business owners or shareholders during the year. And then also the 1099 INT or interest is a form used to report interest paid. And again, the limit there is significantly lower than the usual $600 threshold. So any interest paid in excess of $10 would require you to file a 1099. So, there we go. So other forms associated with the 1099. So for every 1099 type that you file, you'll need to file a 1096. which is just a summary of the information that's on the 1099. So if you send a batch of 25 1099 NEC forms, then you'd also file one 1096 transmittal form where you would check that this is a 1096 for the 1099 NEC forms filed. You put the total number of forms filed and the total amounts paid that was reported on the 1099 NEC. And you need to do this for every type of 1099 that you file. So if you have NEC and MISC forms, just for example, you'd end up with 2 of the 1096. So just 1 for each type of 1099. And then another form that's going to be needed for filing 1099s is the W-9 form. So the W-9 is used to collect the vendor information that's going to appear on the 1099. So like their legal name, their address, their taxpayer identification number, which for individuals would be a social security number. And then for businesses, it would be an employer identification number. It's best to get your W-9 forms as early as you can. If possible, I would request a 1099 when you make the payment to the vendor. If you know that you're going to need to issue them a 1099, because a lot of these 1099 due dates come up pretty fast at the end of the year, and it's not fun to be trying to track down a long list of vendors in January trying to get a W-9 from them. And if a vendor refuses to give you a W-9, then the recommendation from the IRS is to refuse to issue them any payment because you won't be able to file the 1099 later. If you do issue payment to the vendor and then you're not able to get their taxpayer identification number, it's best to just not file the 1099 at all, because if you do file a 1099 without the taxpayer identification number, then you'll get a penalty for improperly filing the form. And if you are requesting that W-9 information and the vendor is refusing to give it to you, it's best to keep records of that as much as possible. You can also keep track of 1099 information in your accounting software throughout the year, just to kind of keep things neat and organized for year end. So if you use QuickBooks Online or QuickBooks Desktop, then when you set up a vendor, you're able to select them as a 1099 eligible vendor and record their taxpayer identification number right on their vendor card in the system. Similarly, if you use Intact, you can attach an actual scanned copy of the W-9 that you received from the vendor and then attach that to their vendor file. There might be some people on the call that are using accounting CS through Thomson Reuters. When you set up vendors in there, you can also check the box to say that they're 1099 eligible. And then there's a line where you can enter their taxpayer identification number so that you don't have to track it down later. If you are using accounting software to track 1099 vendors, there's usually a report that you can pull at year end that will show you all the payments that were made to the vendors that you indicated were 1099 eligible during the year to kind of help you prepare those 1099s. But if you're doing that, I would still recommend reviewing your general ledger or a list of all your payments made during the year, just to make sure the report picked up everything, just in case maybe you missed checking somebody off of 1099 vendor or payment got tagged to the wrong vendor file. It's best to just look over your payments at year end and make sure that everyone's getting a 1099 that should be. If you need any assistance with 1099s, you can reach out to the account manager that you usually work with or anyone on our payroll tax team, and we can assist you with whatever you need. So maybe you know who should be receiving a 1099, you can send us that information and we can process and print the forms if you don't want to have to do that part of it. Or if you need help with the whole process, we can review your books and determine which vendors will require 1099s and process those forms for you. 1099 processing is also one of the items on the year-end letter that we send out, which you should be receiving soon if you haven't already. It's best to send that information to us as early as possible, especially for the 1099 NEC, because that deadline comes up really fast at the end of the year. And just really quick to end off here, I don't have a slide for this because it was a very recent announcement from the IRS, but I just wanted to mention that on January 9th, the IRS is opening a new online 1099 filing portal called the Information Return Intake System, or IRIS. And through IRIS, you can prepare, file, and distribute your 1099s, and it'll also allow you to keep track and records through that website of the completed, filed, and distributed 1099s. You'll be able to use that system to file all the 1099 types we talked about today and several other types. And you can use the website to create the forms either manually, or if you have the information like in a spreadsheet or a CSV, you can upload that as well. Like I said, it was a very recent announcement that was made by the IRS, so information is still coming in, but there was a publication released by the IRS on Friday, I believe. So we'll include a link to that information in the email that goes out with the webinar recording. And if you have any additional questions, our contact information will be available in that email and on another slide, I think, at the end of the webinar. So on that note, I'm going to hand it off to Renee to talk about form due dates and new annual limits.
Thanks, Courtney. I'm Renee. As Courtney mentioned, I'll be covering form due dates, annual limits, and then a little bit of year-end planning. Important deadlines. Once January 1st comes, employees are always super eager to get their hands on their W-2. As an employer, obligation is to have W-2 submitted to both employees and the IRS no later than January 31st. This is regardless of filing method. It also is important to note that the IRS currently requires employers with 250 or more W-2s to file them electronically. This meaning those who have a W-2 count of 249 or less may still file by paper. There is discussion that threshold will be lowered in the near future. I know that's that was mentioned last year as well, but they haven't made any adjustments to it quite yet. And then 1099 deadlines, they are due to the IRS regardless of filing method by January 31st, 2023, and then due to the payee on January 31st as well. 1099 miss, if you're filing by paper, they're due to the IRS by February 28th. If you're filing electronically, they're due to the IRS by March 31st. Those are still due to the payee by January 31st. A couple additional important deadlines. For those of you who are in the state of Michigan, you are most likely aware of their annual form 5081. This is due on or before January 31st. There are a couple exceptions with that. If you are filing via paper 1099 miss that accompany the 5081, they are due February 28th. And if you're electronically filing your 1099 miss, which will accompany your 5081, those are due March 31st. Additionally, I've listed some of the common localities that our firm works with. Those all happen to be due on February 28th. So that annual form for each of the localities listed on your screen with the W-2s are all due on the same day. And then lastly, I just wanted to touch on the employee retention credit. If you have interest in that, there is still time to claim it. If you want to claim the credit for 2020, it is not due until April 15th, 2024. So if there's something you're interested in or want to learn more, our payroll team can help you, or reach out to your account manager and they will help provide you with additional information and get you going on the process to claim that credit. So starting with some annual limit changes for 2023, the Social Security wage base has jumped quite a bit from $147,000 to $160,200. However, the tax rate has stayed the same for both Social Security and Medicare. Also, the employee Medicare tax wage threshold is staying the same at $200,000. This is a tax that only pertains to employees who have wages in excess of $200,000. Once they reach that threshold, they will have to pay the additional Medicare tax of 0.9% on their wages that exceed it. A few more annual limits. These are just some common ones that we have questions from clients. So the 401k and the 403b jumped up $2,000. So 2022 it was $2,000 or $20,000 to $20,500, and 2023 it'll be $22,500. The catch-up also jumped by $1,000 to $7,500, and then simple IRA or simple deferrals has an increase of $1,500 from last year, and the HSAs for a single increased by $200, and a family HSA increased by $450. Those are just a few of the common ones. For a comprehensive list, please take a look at the year-end payroll handout provided at the end. Also, here we have listed the state unemployment insurance taxable wage basis. Michigan has yet to release theirs, but the best place to check on this is online at michigan.gov under the unemployment insurance agency section. The new rate will be posted there once it's decided on. And then as a reminder, come December 31st, watch for your determination notice to come in the mail, or I believe you'll even get a notification if it's in your like MyWAM and available. And make sure you update your new unemployment tax rate as of January before your first payroll, or if you use a payroll provider such as ADP or Paychecks, make sure they're aware of the change as well. So lastly, we have some couple year-end planning notes. So it's best to start planning ahead as early as possible. Look at your December's processing schedule, what it looks like around the holidays. If key people are going to be on vacation, take a look to figure out best way to handle all of those nuances that usually come with December, and adding any additional things that may come up that Tony touched on in the beginning, such as group term life insurance and those auto use, those types of items. Be mindful that if you are paying out significant bonuses, that the deadline for your payroll tax liability, if it exceeds $100,000, is due the next day. That's one that most people don't quite realize, but keep that in mind. And then lastly, come up with a game plan to reconcile your payroll bank account, balance sheet, payroll liabilities, and payroll registers at year end. Our year-end handbook has our year-end handout has guides, charts, and reconciliations to help you. All of those are great tools, and make sure your W-3 ties out to your W-2s as you're preparing it, and make sure those two forms tie back to your annual register as well. Then lastly, steps to an easy year-end filing process. This is kind of what our internal team uses as a guideline to make sure all of our I's are dotted and our T's are crossed. As mentioned before, make sure you develop your timeline of your year-end checklist. And there's a checklist provided in the handout, so that's a good tool to use and kind of gives you a rough guideline of what to look out for and things to think about. Next is always make sure you reconcile your first through third quarter payroll tax returns to your 9/30/22 earnings report. This will help you identify any issues that may have occurred in the first 3 quarters, and you can adjust in fourth quarter before the year's over. So then everything's tied out nicely and you're not missing any tax payment deadlines or anything along those lines. And then reconcile your payroll bank account through at least November, but ideally December 31st before preparing annual forms. This helps you catch if maybe there was a employee who changed bank accounts and their pay didn't go through or something along those lines that occasionally happen. And then lastly, verify that general ledger liability accounts tie out to your annual forms and verify that your employee and employer tax withholding accounts before fourth quarter and W-2s are prepared. This will help you catch again any additional payments that may be made, or any if you accidentally voided a paycheck and reissued it, things like that need to be addressed. So with all that, that's my section of what I had to cover. We'll go to the last slide, which is just questions. So if anyone has any questions, please feel free to shoot them either like the Q&A chat or to our emails that are listed here. More than happy to help you and figure those questions out for you guys.
Okay, thank you, Tony, Courtney, and Renee. We do have some time for questions if anybody wants to pop some in the Q&A function. We did have one question that Tony was able to answer as well, so we can take a few minutes to do that if anyone has any questions. Okay, well, if there's no questions, we will go ahead and wrap it up. Thank you all for joining us today. On Thursday, December 8th, we are going to send out an email recording to all of the attendees in the presentation. Tony, Courtney, Renee, and Jessica, who is on maternity leave right now, their contact information is on the screen and also will be in the email that we send you guys. If you have any other additional questions, please feel free to reach out to them. So with that, hope you guys all have a great rest of your day. Thanks for joining us.